Will mortgage rates stay below 7%? Frankly, can mortgage rates stay below 7%? We got another inflation reading this morning, this time PPI. We got retail sales. We have some interesting activity around Tesla and MeetKevin. We can talk about weekly unemployment claims, where are active listings up the most, that and more in your daily financial news. Folks, let's start with PPI. Now remember, folks, there's always 3 inflation readings that we get each month. Usually CPI, Consumer Price Index, comes out first. That came out on Tuesday. That came in hotter than expected on 3 of the 4 measures. And probably most concerning, at least to me, is that headline CPI is no longer in its downward trend. It broke up. It went from 3.1 the previous month to 3.2. And if you dig just a little deeper, the services component of CPI is not behaving very well. So again, CPI inflation showing that it is at least sticky, if not frankly, building. Now we have PPI. PPI is again kind of producer price index. You can think of it as wholesale inflation. It too came in hotter than expected. So February PPI was expected to be 0.3, was last 0.3. Folks, it came in at 0.6. So that is a 100% miss, and it's a miss to the upside. If you look at core, so stripping out food and energy, core PPI also missed, also to the upside. PPI was expected to be 0.2, core came in at 0.3. Headline is now up to 1.6 year on year. Energy was up 4.4% and gasoline 6.8%. So what does this all mean? Well, to me, it frankly means that mortgage rates probably are going to tick over 7%, at least in the short term. I'm not sure how we can have 4 or 5 inflation readings hot and keep seeing mortgage rates come down. Now, a lot of this has been just, the compression of the margin. I think the margin between the 10-year and the 30-year mortgage is about 276 basis points. It was as high as 310. So some of that compression is just the margin. And again, remind you that historical averages are 180 basis points. So we have about a full % of extra there that will likely over time be issued. Hey Josh, thank you for the super chat, and thank you for the algorithm goose. I appreciate you very well. So again, I don't know. I've been on record on this channel, on this live stream, saying I hope rates stay above 7, and I hope they do. We need the housing market to slow to kind of heal itself. But there you go. What about retail sales? What is going on with the consumer? The consumer, as you may recall, had a weak January. Again, January, as I recall, was expected to be up 1/10. It was negative 0.8, so a huge miss to the downside. There was hope that retail sales would be up this month. It was expected to be up 0.8, so quite a snapback in February. Well, in reality, it was up 0.6, so a miss to the downside. In addition to that, it is showing that last month was actually worse than expected. Last month was a negative 0.8, was negatively revised to negative 1.1%. I saw a comment come across saying that the 10-year is spiking. I don't know how it doesn't. Higher for longer. I mean, we are seriously talking about no rate cuts all year with inflation doing this. So it's an early call. I'm calling this really early. But mortgage rates may be over 7% by close of business Friday. May not get there today, but given the inflation reading and stickiness, we could be there tomorrow, is my wild ass guess. So the other thing we talk about every week, every Thursday, is unemployment claims. Unemployment claims last was 210, expectations 218. So the expectations are the market is getting worse. Reality, 209. So a slight beat to the downside. Again, expected to be 218, last 210 came in at 209. On top of that, we got some earnings that are interesting. We got Dollar General, beat top line, beat bottom line. Did highlight that their consumers are trading down from discretionary to staples, really focused around food and making food at home. Dick's Sporting Goods, beat top line, beat bottom line, and raised their dividend. Dick's Sporting Goods had the best quarter in company history. So again, retail sales still seems to be kicking along. I saw a post about equity in homes. I believe this was sent out by Dion Talk on Instagram. If you don't follow him on Instagram, it's Dion Talk Financial Freedom, I believe. This is wild to me. Wild to me. Equity. What is the position of equity in U.S. homes? 39, I'm just rounding. I'm just going to round. 39% of U.S. homes are owned free and clear. I'll say that again. 39, let's call it 4 in 10. You drive down your street, 4 of those homes are paid off. 28% have equity greater than 50%. It is only 33% of homes have equity below 50%. So again, when people talk about being over leveraged and all those things, you got to remember, home ownership, not so much. We have, let's just call it 70%, 7-0. Drive down your street, 7 out of 10 homes have 50% equity or more. Also, remember something we brought up probably 6 months ago. The combined interest rate, what's called the marginal or effective interest rate on all mortgages today are about 4%. That is up slightly from a low of 3.8, right? As more mortgages get issued, it pulls that up. So again, and the debt is fixed. Again, the debt is fixed. So again, lots of stuff going on there. Again, folks, I am doing this buying Vegas, right? I am looking to buy a cash flow rental in Las Vegas. I am asking for your help. And if you know anyone, you live in Vegas, you know of stuff, I'm looking to build relationships, create a buy box, learn the market, which means I have to network. I want to thank 5 or 6 of you who have reached out to me already saying you are either in Vegas or you invest in Vegas and you are giving me some ideas. If you know of a wholesaler or whatnot in Vegas, let me know. Again, I'm looking to get a buy box, buy a cash flow rental, prove it's possible even in this market in that very competitive city. So thank you for all the folks. You guys are amazing. In 24 hours, 5 or 6 of you sent me some notes. So thank you, thank you, thank you. Please keep it up. Next, let's talk about active listings. Remember, one of the things you have to do in your buy box is watch active listings. I suggest you look at active listings for your buy box and also the overall market. Here are the 5 states with the most or the highest active listing year on year. Let's start at the bottom. So the U.S. average, the United States average, active inventory is up 15% year on year, 15. Coming in number 5 is Alabama, with active listings up 27%. Oh, sorry, my bad. That was number 4. Number 5 is Arkansas. Arkansas is up 23%. Alabama up 27%, my mistake. Louisiana up 28%. Mississippi up 28%. And Florida up 46%. So it certainly looks like the Southeast has inventory up. Now, again, active inventory up to these numbers, are they even back to 2019? I think it's fair to say that Florida probably is. But I don't know. I mean, talk about Arkansas. I have no idea what Arkansas active listings were in 2019, but perhaps even a 23% rise year on year does not bring us back there. Remember, if I were looking at these listings, I would want to know year on year and then today versus 2019. I think where you are in trouble is where you are noticeably above 2019. And again, as we have pointed out repeatedly recently, Southwest Florida has some ugly numbers with Punta Gorda, something like that, being one that is particularly concerning. Don't know if you saw this, but there's a lot going on with EVs. The other day, Wells Fargo downgraded Tesla and I think put something like a $125 price target. Now we have the one and only and ultimate Tesla pumper, MeetKevin. Apparently, MeetKevin has not only stopped buying or holding or hodling or whatever Tesla, if you are to believe his thumbnail, he is shorting Tesla. That is quite the flip-flop. Again, that's a stock that I will never play with. It is kind of a cult-based stock, and when it cracks, it will get ugly, and I don't want any part of that. Not to be outdone, the EV maker Fisker is rumored to be considering bankruptcy as a way to handle its overarching debt position. So again, folks, we got a lot of stuff going on. I do want to thank you for supporting my help in buying in Vegas, buying cash flow. Again, keep reaching out. Keep telling me what you're seeing. As I highlight to everybody, you got to network. You got to get to know people. I'm very much in the learning process. My learning process of Vegas will take 60 to 90 days, just like you. There's nothing I'm doing in this that is magic. It's networking, looking at deals, meeting agents, creating search criteria, and all of that. So folks, I hope you have an amazing day, and please don't forget, this shirt is only available in March. A lot of you have already purchased it. Thank you, thank you, thank you. If you want this cash flow over everything shirt, you've got another week or so to pick it up. I will replace it with a different shirt in April. So again, if you want cash flow over everything, you are running out of time. Go get it. Link in the description. Of course, you can get the hats, the coffee cups, all of that. But this shirt will be gone at the end of the month. Take care of yourself. Have an amazing day. Later. Put the button. There we go.